Good day and welcome to the Q1 FY2024 earnings conference call of ZF Commercial Vehicle Control Systems India Limited, hosted by Batliwala and Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Annamalai Jayaraj from Batliwala and Karani Securities India Private Limited. Thank you, and over to you, Mr. Jayaraj.
Thank you. Good afternoon. Thank you for joining us today and welcome to ZF Commercial Vehicle Control Systems India Limited quarterly earnings call. The first quarter earnings results for this year 2023-24 will shortly be presented by the management team of ZF Commercial Vehicle Control Systems India Limited, formerly known as WABCO India Limited. Your host today from ZF Commercial Vehicle Control Systems India Limited are Mr. P. Kanniyappan, Managing Director, and Mr. R. S. Rajagopal Shastri, CFO. I will now hand over the call to Mr. P. Kanniyappan, who will provide you with further insights on the results. Over to you, sir.
Thank you, Mr. Jayaraj. Good afternoon to all of you. I warmly welcome you all to ZF Commercial Vehicle Control Systems India Limited first quarter results for the financial year 2023-24. We will make certain forward-looking statements today based on management's good faith expectations and beliefs concerning future development. As you know, actual results may differ materially from these expectations because of many factors. ZF Commercial Vehicle Control Systems India Limited results for the quarter ended June 30, 2023 were published on July 27, 2023. They are available on the www.zf.com website within the ZF TV India Investor Relations section. We hope that you have had an opportunity to go through them. The recorded audio and transcript of this call will also be made available on the website at www.zf.com under the ZF TV India Investor Relations section. I am happy to talk to you today as we give you an update about the business of the company. Industry and economic update. I would like to start with a quick update on our operating environment, which is influenced by economic factors and the development of the commercial vehicle industry. Indian government thrust on capital expenditure, moderation in commodity prices, and robust credit growth are expected to nurture investment activity. However, weak external demand, geo-economic fragmentation, and protracted geopolitical tensions pose risk to the outlook. Taking all these factors into consideration, real GDP growth for 2023-24 is projected at 6.5%. Source RBI's MPC, which is still the strongest among large global economies. Strong all-round performance with all segments significantly growing year-on-year, reflected in the commercial vehicle production more than 6 tons category of vehicles in Q1 of FY 2023-24, which was at 101,527 vehicles with a growth of plus 7% versus same quarter the previous year. The growth in the commercial vehicle segment is expected to continue due to the following factors: transition to emission standards BS6 Phase 2 and ESC Electronic Stability Control regulation for buses. Second, despite fluctuating demand and vehicle availability issues, the government's push towards infrastructure development and growth in the coal mining spurred sales of heavy commercial vehicles. Third, steady demand on the back of infrastructure push. Let me give you a performance update within the segments of the company. First, OE sales. As briefly touched upon in the last earnings call about the trailer systems, bus production, heavy and medium duty CV growth, transition in regulation requirements, and e-mobility transition have helped the company to outperform the market by 12.9%. As a result, the company recorded an OE sales of rupees 446.9 crores in Q1 2023, which is a 19.9% growth versus the same quarter previous year. OE sales in Q1 of FY2023-24 was led by number one, start of production of pneumatic and hydraulic electronic stability control as applicable for bus platforms as part of the regulation coming into effect from April 2023. Second, increase in penetration of e-compressor, electric compressor and electronic braking system in major OEMs. Third, increase in trailer production and adopting of technologies by the trailer manufacturers in India. The second sector that I'm going to focus is aftermarket. So aftermarket segment of the company has registered a sale of 120.7 crore INR, which is a growth of 17.8% in Q1 2023-24 versus Q1 2022-23. Growth in aftermarket was driven by various factors as follows. Good demand in the mining area during the Q1 of FY 2022-23-24, in which the company saw a growth of 60% due to an increase in the mining operations. Strong uptake by the STU, State Transport Undertaking segment, due to good consumption KSRTC, APSRTC, and the fitness certificate kits and solution kits. The company also made inroads into other state-owned transport organizations, for example, winning an order from UP State Road Transport Corporation through the tendering process. Third, demand generation activities on the focused product groups like slack adjusters, where we saw 60% growth, and vacuum boosters, we saw about 23% growth, trailer segment about 20% growth, actuators on 18% growth, and door control system 16% growth. All these have aided the growth. Fourth, further in the new technology products, the company received orders for over 2 units of rear park assistance systems from one of the major OEMs. Also, on the new technologies, orders were booked for over 95 advanced driver assistance systems plus driver behavior monitoring systems from various customers. The next segment that I would like to focus is exports. Export sales were at INR 297 crores with a growth of 14.6%, and export services were at INR 93.2 crores with a growth of 58.9%. The increase in exports of sales was driven by number one, increased demand from BMW for the air supply unit, DAF 440cc compressor production transfer from the US to India, and increased demand for DAF compressors in Europe. Increased demand for gas disc brake levers. The increase in exports of services was largely on account of growth in continuous increasing demand for engineering services from India, resulting in an increase in hire and increased service exports. New premises in DLF semi-attracting talent. ZFCV Control Systems Manufacturing India Private Limited, a wholly owned subsidiary of the company, commenced its operations during the last quarter of FY 2022-23 and is eligible for a reduced tax rate of 17.16%. The company has planned localization to improve profitability with lower material costs and reduced premium freight. Awards and recognition. Our Ambattur plant won 2 gold awards from the QCFI, Quality Control Federation of India, state level Karakuri Kaizen competition. Also, Ambattur plant won the Platinum Award in the CII National EHS Circle competition and the best organization overall EHS practices team. Also, Ambattur plant employees from different functions won the first and third prizes in the Auto Component Manufacturing Association Lean with competition. Ambattur site recently underwent the responsible manufacturer assessment conducted by Kaizen Hansei and secured TRM Gold for the overall ESG assessment. We are happy to share that the company has been honored with the prestigious Best Technology Partner Award 2023 at the recent supplier meet organized by Mahindra Truck and Bus Division. Chosen from over 200 companies, the company was selected for supporting Mahindra & Mahindra in applicating, homologating, and launching ESC Smart pneumatic electronic stability control system on their range of trucks and buses, well ahead of the regulatory mandate in April 2023. And now moving on to our financial performance for the quarter. For your ready reference, the results were made public at 12:25 p.m. on the 27th of July 2023. I hope you have had a chance to go through them. The overall revenue of the company was INR 864.5 crores, profit before tax INR 133.6 crores and 55.2% growth year on year. EBITDA of 18.8%, profit after tax INR 99.7 crores, which is 59.8% year on year. So we continue to carefully review the environment and our performance to consider further opportunities for actions to mitigate ongoing commodity inflation. This is important as we also see softening of the commodity prices going forward. Thank you. We now welcome your questions and feedback. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Mumuksh Mandlesha from Anand Rathi. Please go ahead.
Thank you so much, sir, for the opportunity and congratulations on the good set of numbers. Sir, first on the gross margin, which saw improvement of 180 bips sequentially from Q4 quarter. What could be the reason for the improvement, sir?
On the gross margins, we are seeing that the productivity is helping us to a certain extent. Mix is also helping, and we have been seeing improvement in the last few quarters in the overall gross margins, as you see, as we are able to secure the compensation for the commodity inflation one after the other from the customers, and we also have been tracking certain products in which we were not making adequate margins, and we have been getting some price corrections internally. We are looking at various measures to improve the material cost ratio with the help of our own productivity measures like VAVE and VMT exercises. All put together, it is giving us a positive impact on the material costs and the gross margins.
Got it, sir. Also, can you share the outlook for the exports market considering some slowdown in overseas CV? And what could be the breakup between the PV and CV in the export market, and also the breakup between Europe and North America?
Yeah, so see what is happening in the commercial vehicle segment globally. Despite all this, COVID and the geopolitical tensions, so the markets to where we are exporting, there's no big increase or a drop. Meaning it was more or less flattish. So if you see our performance as well, so by and large, we are maintaining and growing. So the growth is largely driven by some of the demand that is increasing in certain segments. Particularly, as I highlighted, we are making the air supply units for the BMW company, so car company. So BMW has been, this product is actually also applicable to the electric vehicles as well. So as such, there's a growth. So that is number one. Number two, while we are retaining our current position, few products. So mainly the compressors that we are supplying it to Volvo earlier. Now we are extending it to DAF. DAF actually we started initially supplying it to European market. That is further increasing. Maybe DAF is gaining market share, but then we don't know. Our demand has been increasing there. This is the one particular size of the compressor. The another size was actually it was not released in India, but it was released originally in the US production site, Charleston. From where we were supporting the top compressors, but because India is offering a better price, meaning the manufacturing cost is much lower than what otherwise would cost to produce in the US. The management took a decision globally that this will shift to India. So we have shifted the production to India, and that production also it is streamlined now, and the last few months we started exporting. And then we also invested on a production facility for producing one of the products called the lever for the air disc brake, where steadily the volume is increasing, because again the cost advantage that we provide leads to more production being shifted to India. So these are the reasons for our growth in export, and we believe this will continue, at least in the near term. We see it will continue. Our growth is largely driven by, apart from the vehicle production in other markets, also specific projects that we are driving, maybe production transfer to India, in some cases new projects, etc. The second question is, how much is the mix between the passenger car and the commercial vehicle? Ours is largely commercial vehicle production, but except this one product, it is the air supply unit which we supply to BMW. That typically you can take about 25% of our production from my university plant, and in the current mix, we don't have any other passenger car production from my university. So the rest is only commercial vehicle.
Right, sir. Just on between Europe and North America, how could be the mix, sir?
I don't know the correct numbers, but
it's almost 45, 50 and 5. 45% goes to North America, 50% to Europe, and 5% goes to APAC.
Yes, sir.
Yeah. Thank you so much for this, sir. Thank you.
Thank you. The next question is from the line of Vimal Jamnadas Goyal from Alchemy Capital Management Private Limited. Please go ahead.
Yes, sir. Thank you for the opportunity, and congratulations on a very strong performance. So just first question would be on the impending regulation on ESUs. If you could just help us with the content that will increase, that will lead to increase for us after the ECUs get embedded. How much is the content per vehicle there in dollars?
Yeah, so the regulation is essentially to fix the electronic stability control in the bus segment, applicable bus segment market. The applicability is typically was of about 60% of the buses produced, but still some confusion in the segment because some buses are actually completely fitted in the factory itself. There are some cases they are doing the bodybuilding elsewhere, so those are not fully implemented, that part. So we are now working with RTOs and others to really communicate and tell them that these buses have to be applicated with the ESC. So it may take some time. So today we see about 30%, so 60% of buses are applicable, but we see actual pull from the customers have been so far about 30-35%. So we're working on that because the mandate itself has to fully understood by the entire stakeholders and then implement. So we are also working with them. Now the second part of the thing is this is roughly 1,000 sets per month. Now if it's a pneumatic ESC, we're supplying about 1,000 sets a month. Hydraulic ESC probably about 300 sets a month. both we have solutions. Now coming to your delta increase. Delta increase for the bus segment is, meaning the pneumatic segment is about probably 20,000 rupees delta. For the, because earlier they were already having that ABS. On top of that, they go for an ESC, so the delta is about 20,000 rupees. In the case of hydraulic ESC, we were not actually in that segment earlier. This is a new product that we are launching. So there it's about anywhere between 15,000 to 20,000 rupees is the delta.
Understood, sir. And sir, any while the bus segment is looking to sort of put up more safety features, what is the response from the non-bus segment, which is the goods carrier segment, for our content? I mean, in terms of all these safety regulations, if you could just highlight that. And one more question, if you could answer, sir, on the margins. While we have seen gross margin improvement, our EBITDA margin has sort of remained flattish. If you could highlight the reasons for that. While YOY there is an improvement, but given the kind of growth that we have reported, I would have expected some sort of operating leverage. If this is one time and this could correct itself going forward. And lastly, sir, what is the capex that we are expecting to do for the full year? Thank you.
Yeah, thank you. So on the margins and the capex, I would request our CFO to answer. I would take the first part of the question, which is essentially what is the interest in the non-bus segment, or what is likely to happen on the non-bus segment on the regulation. So normally the stability control as a electronic stability control as a regulation has come for all the, by and large, for all the vehicles in other markets, Europe and other markets. India, in our view, it's a first step to apply to buses. Second step, it will come for the truck segment as well. So it's a matter of time. So we are expecting that in the near future. Because this is a technology needed to put further technologies over and above that. For example, the advanced emergency braking system, or ADAS, which we call. So these things, if it has to come to the market, ESC is must. So in a way, it's another base technology to ensure that the vehicles are stable and safe. So even before regulation, quite a few customers have actually homologated their truck platform with the ESC, so that they can actually start selling to customers who really need this, even without regulation. Because it's, as I said, it's a very basic technology. Many people who are running hazardous goods, even now they would be definitely interested to put this, because it will significantly reduce the rollover accidents. So we expect the market to recognize the advantage of these technologies once these products are seen in the market. First from the buses, even some other customers will be launching in the truck segment as well. So it's and then that will be followed by maybe next 1 or 2 years. It will come for the truck as well, because we expect the government is actually mandating the advanced emergency braking system, for which, as I told you, that ESC is a requirement. Itself, that AEBS, we call it, advanced emergency braking system itself is, the standards are already documented, and we expect that will be notified soon, next few months. Then the government will allow certain time frame for people to really introduce. So all these things are in the vicinity of implementation as we move forward. So I think I hope that has given you some idea of the possibilities and opportunities. Maybe matter of next 1 or 2 years, progressively this will increase. Now on the other two questions, I'll request our CFO.
Your question was on EBITDA, but if we look at year on year, if you look at only product sales, we have close to 3.8% improvement in the EBITDA margins. And if you include the service income, it will be about 3%. But typically, we do have a 3.8% improvement in EBITDA. But anyway, if you are having some doubts on that, you can connect offline. I can explain the calculations in that case. And you are talking about CapEx. Our regular maintenance CapEx is in the range of 100 crores. And if you look at this year, for the Oragadam plant, we do have an additional, including the land lease, capitalization of the right of use asset, and then the building and also the equipment which goes inside, we should see in the range of another 130, 140 crores for that. So all put together, we should be in the range of 240 to 250 crores this year for including the Oragadam plant. And then we'll stabilize back to the maintenance CapEx of 100 and other expansion as and when we plan.
Understood, sir. Thank you so much. I will come back for the margins. I'll take it offline. Thank you so much.
Sure. Thank you.
Thank you. The next question is from the line of Mukesh Saraf from Avendus Park. Please go ahead.
Yes, sir. Good afternoon, and thank you for the opportunity. My first question is on the ESC. You were mentioning about how only 30% of the buses are right now, getting factory fitted. So just wondering, sir, isn't the ESC part of the chassis itself, and why does the bodybuilding itself come into play? If you could just kind of explain this, sir.
Mukesh, can you say it again? I couldn't get that question fully.
So, what we are wondering is, why isn't the ESC being factory fitted, sir, for all the buses that are coming under the applicable category?
Yeah. Actually, there are certain category of buses that are running in the city. The applications are actually excluded. That is the first issue.
Right.
Then within that, many companies, many OEMs thought the school buses are also not required to be fitted because they assume that it's in the city, city road, inside city. But government came back and then said no, it is school buses have to be fitted. First clarity came from the government that all the school buses also have to be fitted.
Okay.
So from October, we expect progressively from October, school buses also will be included. It will lead to an additional number. Today, for example, about 1,000 pneumatic ESCs and about maybe 300, 400 hydraulic ESCs sold from us. We are selling, and once the school bus is also included, this number will increase. Number one. Because we expect minimum 2,000 plus buses to have a ESC fitted every month. Then further, the issue today we face is some of the buses are actually, which is the bodybuilding is done elsewhere. So when it goes out, in a way, some customers exclude this. So the bodybuilders also do not, maybe they do not know this regulation, etc. So we are now sending it to them and send mails to all of them, and we're also working with RTOs to make sure that when they register the buses, they verify these aspects. So it will take another time, another few months. I'm sure the market will fully understand this and then implement it.
So once this is done, how much will it be, sir? Because you said 2,000 is the number, including the school buses.
Yeah, 2,000 plus. I'm seeing some more increase will come because after the electric buses that are produced in India also. Now it is fitted with the ESC and EBS also, some of them are fitting EBS also. So we expect the numbers to slowly increase beyond the 2,000 per month.
Okay. Understood, sir. And secondly, sir, you had mentioned some products, new tech products such as rear park assist Are these products coming from the ZF portfolio, and we are, and WABCO, or rather ZF CVCS is supplying it in India? Is it not part of the erstwhile WABCO portfolio, sir?
So the most of the products I'm covering is only within the CVCS portfolio, which is essentially former WABCO. The ADAS, Advanced Driver Assistance Systems, driver behavior monitoring, etc. Those things are actually originally was to be in the ZF portfolio, because both ZF and WABCO were developing these technologies, but when it got merged, it has been decided that this should be routed through the CVCS portfolio, which is essentially the former WABCO portfolio. So that's a part of this one. Also, this hydraulic ESC, as I told in the earlier meeting, that this was not originally in the CVCS part. It was a ZF portfolio, but now we have brought into the CVCS because the team in India is actually providing all the customer support and also homologation, etc. So it is routed through this. So as I told earlier, depends on which is the best way to route to the market. We decide. There are products where products that are produced directly and then sell it to the customer, and it is through the ZF route. Products that need a lot of local application, lot of local testing, validation, or homologation, etc. We decide to do it through CVCS because of the best approach to customers.
Okay. Right, so understood. And just one last one, sir. Last quarter you had mentioned that the trailer ABS penetration was only close to 30%. Could you give some more color on that as to how do you see that improving? Are you already seeing on the ground? Because you had mentioned trailer as a key driver for your OEM revenues. Any more color on that trailer ABS?
So the trailer segment continues to grow very well. In a way, very strong. As I said, the percentage of we call it tractor trailer. The tractor trailer segment, that part of the vehicle as quarter, 15% of the overall vehicles have become tractor trailers. We believe it will only increase because the fleet see with the increasing the road network, ability to transport more material with the higher tonnage type of haulage vehicles, 50 by 10, etc. It becomes more profitable for them to really handle it through a trailer. Plus, also the trailers now, government also has now made it possible to separately register a tractor and a trailer. So you can have multiple trailers for a single tractor, which makes the whole productivity much better. The tractor can keep working all the time when they are loading the trailers. So this is one. The other thing that has happened in the trailer segment is, if the trailers are having air suspension, they are permitted to carry per axle one more additional ton.
Right, sir.
So again, that helps them to transport more material with the same trailer. So we see few developments in the market. Plus also, if you see companies like Delivery, they are all completely transforming the industry, and they are, while they improve the turnaround time and increasing the freight productivity, etc., transport productivity, etc., they are also seeing the need for application, adopting the new technologies. So most of this trailer segment is now fitting the trailer ABS. Trailer ABS roughly about 30% of the market today. The trailers that are produced are with trailer ABS. We also see close to maybe around 10% of the trailers are fitted with the trailer EBS. These are all quite reasonably expensive products. Also now, as I said, So the trailers are allowed to carry more load if they have air suspension, 1 ton extra per axle, which means air suspension also is becoming, it's adopted more, and almost I would say per month about 4,000 trailers are produced, means 3,000 trailers are with air suspension. Right now it could also further increase. So for air suspension also we have solution per trailer about 10,000 rupees fixed supply. So the entire things are, I would say, growing very well, driven by the fleet profitability by using the trailer. So we believe it will only improve. It will only go further up in the thing. And segment is for us also it's a very reasonably profitable business.
Sure. Got it, sir. Thank you so much, sir, for the elaborate answer.
Thank you. The next question is from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Hello, hi sir. Good afternoon.
Good afternoon.
I have a question regarding the sustainability of the margins. Can you please say, because 15% is like it's like one of the best margins that we have right now. We haven't clocked before more than 15%. So what is the sustainability of this margin going ahead? Is it sustainable?
Yeah. So see, we are fundamentally a continuous improvement company. We are a TQM company, and we are always looking at how to improve. That's one basic philosophy. Number one. Number two, we are also looking at more seriously now each product level margins, and we have categorized some of the products bleeders, meaning the challenging way we should continue to bleed and supply, etc. So a lot of activity we are doing to really make sure that we not only sustain this margin and if possible improve. As a philosophy, I am not committing anything here, but that's the way we move forward. Also, the industry is also moving towards advanced products and technology. We start selling electric vehicles for the EV systems for the buses. Even though numbers are low, but content-wise is high, and we are trying to see if we can localize and reduce the costs. And also electronic braking system, electronic stability control, so many things. These are all very high-end advanced products, not that easily available here. So the third is, we fundamentally look at margin differently because we like to really focus on profitable growth. There are products where we're not making money, commodity type of products we are also exiting and then trying to go into a more of advanced products portfolio.
And any guidance for this year, any ballpark number that you are aiming for to achieve for this financial year?
We don't give a guidance, but as a philosophy, as I said, we would like to improve. But you also know that 15% or 18.8% EBITDA is very, I would say, a healthy margin. So at least we will sustain. That's the way currently we look at it, but we are looking at all possibilities to improve.
One question was on, you said the offshore is still in some tailwinds. So how do you see the next leg of growth in this, in India precisely? How do you see this sector evolving now, going forward?
Can you say it again? I couldn't fully get it.
Am I audible?
Yeah, you're audible.
Excuse me, Mr. Pandya, maybe I request you to kindly use your handset. We'll get a clearer audio.
Just a minute.
Okay, sir.
Hello, is it audible now?
Yes, sir.
Yeah.
Sorry for this. Really sorry for this. So I was just trying to understand what's your view on this auto sector right now, what India is going through, and how do you see the next leg of growth coming in our company?
Auto sector growth. Yeah. Right now. Okay, so of course you are as much as informed as on this subject like this. But what we see is number one, we are tracking the fuel prices versus the freight rates. So in the most recent period, last 2-3 months, we see the freight rates are increasing, while the diesel is staying the same, more or less same. So this is one indication that going forward things may only improve. Plus, of course, we also see the inflation also is softening. Plus there are many factors that actually in the truck segment shows that the truck profitability for the fleet seems to be improving. So all that augur well for the industry. But this year our target or our projection is about at least 10% in the calendar year growth of vehicles above 6 tons. And so far we are in the direction or slightly more than that. So we would this year probably end up at least minimum 10% vehicle growth versus the previous year. And we were projected for 10-year time frame, but we see we are not seeing any big cyclicity yet, meaning there is still a growth seen from, of course, whatever projections we are seeing from other people. So for us, it's a positive outlook. This is number one, vehicle production. But our sales is not merely from a vehicle production perspective. Our sales is largely driven by the technologies and outperforming the market. So the opportunities there seems to be in the trailer segment is doing quite well, and many new technologies are likely to come in the next few years. All trucks will get applicated by ESC in the next few years. And thereafter, we are expecting that there will be we call it ADAS, Advanced Driver Assistance System, or the Advanced Emergency Braking, different terminologies, but essentially it is either an alert system or a braking system driven by the sensing through a radar or a camera system. We have already some of the big players in India. We are already connected with them, and some of them will start seeing the solutions in the market. We call it collision mitigation system. It will actually potentially alert the driver for a possible accident. So in case if he still fails to apply brake, it will partially apply brake and full brake also. So we expect some of our customers, at least one of the customers, to launch this system, pilot, etc. So in the passenger car segment, this has already started coming. So this will drive our growth thereafter. So ESC and advanced emergency braking are the two technologies we strongly believe will come in the next, probably from now to next few years. This will be driving our growth. So it's as it looks, it's a positive story. Subject to something anything geopolitical or anything else, but we feel the next few years could be a positive story only.
One final question is regarding the finances. The finance cost that we have seen is it has jumped a lot. If you can please guide us what is it about expenses?
Finance cost, how much did you see at the jump?
From 46.81 to it's now at 132.48. On the
1.32 crores, right?
Yeah.
Yeah, it's largely because of the bank guarantees which we have to provide for some tenders and certain businesses. Those are there, and plus also certain lease-related entries are getting posted there. So effectively, we don't have any. It's not because of borrowing. This small increase in 1.32 crores is largely because of this non-fund related costs.
Got it. All right, sir. Thank you so much for your time. All the best.
Thank you.
Thank you. The next question is from the line of Pratik Poddar from Nippon AMC. Please go ahead.
Yeah, hi. So just two questions. One is you talked about shifting of production from US to India for certain products, especially compressors, right? Could you just give us more flavor in terms of what kind of size of opportunities this or or what are the other products which can ship from US to India because of low-cost manufacturing, which can help you offset the cyclicality which eventually we will see in the commercial vehicle industry?
Yeah, thank you. So basically, the way we grow our export business is by providing a very good cost advantage to our other global sites and plants. And compressor is one product, of course, we have already demonstrated the possibility to already we are supplying it to WABCO. Then it's a natural extension to other players. So now is the next customer. But because there was other issues in terms of releasing a product from India due to certain design and other things at a global level. So finally, when everything is streamlined, then automatically this was shifted to India. So the third customer we expect, we are working is Daimler Global, Daimler AG. So when we keep producing more and more compressors here, the supply chain, the volume and the scale further makes us more profitable. So we believe that will only increase our position in the truck segment, in the compressor segment. From US to India, I don't see much of a transfer beyond this, because US still they have to start. They are largely relying on supply from India, at least in our plants from India or other markets. But opportunities can come from even Europe as we move forward in certain products which they believe India could be a low-cost location, and we do a lot of continuous work on that. As we move forward, we may also work a few other products as well. But right now, I'm not in a position to say anything to you, because still in the work in progress. But I told you that the next product that we will be producing from here to global market is the compressors for Daimler. This project is already kicked off and the team is working. And because every time in this earnings call, I will keep updating as and when things are shown.
So the question was, in the medium term, can this opportunity of India having a cost advantage help you offset the cyclicality which we see in the India in CV industry?
Yeah, absolutely. That's how it has worked so far. In the last 10 years, if you see, the export has been continuously growing. We were not much disturbed by export, and so cyclicality, by and large, we are able to manage. I expect that to continue.
Okay. And you talked about ESC and ADAS systems to drive growth for you for the near and medium-term future. Could you quantify what kind of outperformance over industry growth can we see because of adoption of these two products for us?
Yeah. So not only these two products, but as such, India still we are in a very value per vehicle is still very low. We are only in the range of about 600 euro per vehicle. But then globally, if you see, there are markets 3 times or 4 times. So there's a big pipeline. As the market, because India market always was much behind the European and other markets. But now slowly we are catching up. For example, ESC, when ESC comes, automatically it is supposed to increase. As I said, about 20,000 rupees per vehicle means you are talking about another 50% increase versus the current value per vehicle. One system alone. And ESC is applicable for, by and large, all the air brake vehicles, which is 70-80% of the trucks produced, above 6 tons. And also we have a now solution for hydraulics also. So virtually any vehicle produced above 6 tons, that is for the truck, will have to have. So this is the first opportunity. And you see today's ADAS system that we are ready with is more than it can vary anywhere between 30,000 to 50,000 rupees per system, and depending upon the complexity, etc. So per vehicle, so that will have to further double. But all these things again, it's not going to happen one day, 1 year. It's a continuous progress. But we are very well positioned to again support the market with all these technologies. We have our own test track, help the customers to really homologate, applicate all these technologies. So I would say that's how I am confident that growth will be driven by these technologies going forward. Apart from the vehicle production itself in a CAGR of maybe 4% or just 5-6%. But our growth will be largely driven by the technology.
Sure. Thanks, and all the best.
Thank you. We'll take the next question from the line of Nirali Rupani from Unique PMS. Please go ahead.
We'll take two more questions, and then.
Sure. Thank you.
Hi sir, thanks for the opportunity. Also, in your opening comment, you did mention that we have outperformed the old market by roughly 12-13%. And I understand that ESC and ADAS system is yet to pan out as we have expected. So if you can just explain the factors that led to this kind of outperformance in this quarter.
Yeah. What is happening in the market today, even though the vehicle number is not much, the content, because if you see the composition of the vehicle, more and more heavy-duty vehicles are being produced now. 55 tons, 48 tons, like that, which was not the case earlier. Earlier, mostly the numbers were, medium duty, slightly in the lower end of the heavy-duty segment. And so, if you go for a multi-axle, 55 tonner, etc., each axle we put our system. So, automatically that provides us the opportunity to outperform. Also, I talked about the trailer segment, which used to be so subdued in India earlier. We used to make about 3 crore a month type of sale. Today, we are talking about more than 10-11 crores. Just a matter of in 2 years' time, it has reached this level. So, plus we have digital products and technologies. We have started selling. Again, there also the content we increase. Now we are going to provide the over-there update capability, etc. So, in every area we are upgrading the product, upselling the product. So, that also drives the outperformance. So, when we move more into the ESC, also one more thing that has helped us so far in the last quarter is now India started producing electric buses. Typically, in a month, some 300. We are supplying about 300 vehicle sets. This has come with e-compressor, electric compressor. I must have told you earlier, the normal compressor, our value per vehicle is about 5,000 to 6,000 rupees, but an electric compressor is probably 100,000 rupees. So plus electronic braking system comes with most of the electric buses. That's about 50,000 plus delta. So all that is driving our growth. That is given this 12%. So I hope that has given you.
Yes, sir. So I know that you don't give any guidance, but ideally, if this regulatory reforms, pan out as we expected to, the outperformance can be much higher, right?
Can you? My voice was a little disturbed. Can you say it again?
No.
Continue to be higher.
Yeah, in theory it is yes, but some fluctuation here and there is there. But typically, at least we should outperform double digits. I'm not sure. Because it all depends on when the regulation is going to come and this adaptability. But by and large, you can expect about 10% plus outperformance will happen.
And then what will be the total investment that we have made at Oragadam, and what can be the asset turn that we normally expect in our business?
So it's close to 135 crores on the Oragadam plant, the factory building, the land lease, and also the equipment which is coming in. and it will have another 35 to 40 crores coming upcoming year also. This is what is already in the plan and already approved. That's what it is. And you had some questions. What was the follow-up question on that?
What kind of asset turn can we expect? Or what kind of revenue can we expect?
Okay. We, from an asset turn perspective, you notice that we operate with about 2 to 3 tons. And we should very quickly come to that kind of numbers quickly there too.
Perfect. And sir, as this exports grow every year, what kind of impact that can have on our EBITDA margin? Is it in line with what we do at the company level, or they're higher or lower?
See, from a segmental perspective, because we do not share the kind of segmental profit view, one thing I can tell you is that we do not add to the fixed cost or the overall supervisory cost that whenever we improve any one segment of revenue. So that should help in the operating ratio and should overall result in better EBITDA margin.
Yeah, perfect. Thank you for that.
Thank you.
Ladies and gentlemen, due to time constraint, that was the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
I would like to thank all the participants and for the very interesting discussion. So, thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, on behalf of Batliwala and Karani Securities, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.
Please subscribe and press the bell icon to never miss another update. Please like, share and comment.